Morning, Steve Free in Chicago with the morning grain comments. Well, we're starting out weaker today. I think the market is looking at some of the comments over the weekend. First, the President of the United States put a tariff on the $200 billion worth of China goods and has threatened that if in 30 days there's no deal, he would put tariffs on the remaining $300 billion of Chinese imported goods. The Chinese says they will retaliate, but right now they haven't really mentioned as to what the retaliation is going to be. Consumer groups are warning U.S. consumers that they may be paying more for China goods if they put tariffs on things that the U.S. is bringing in from China, and it could lower export demand for things that China normally buy from the U.S. Looks like the stock market is sharply lower in Asia because of no deal. Looks like our stock market is going to open up 500 points lower. Right now we've got beans down 11 cents, corn down 4, and wheat down about 3 cents. The Chinese did come out and say there's three main issues in which they want to resolve to get a deal. First is they want the removal of all tariffs. Number two, they must set targets for China purchasing U.S. goods in line with the real needs, which means some of the shopping lists that we had rumored about high quantities of beans, corn, and wheat, and all the other things may not happen. They may just take what they need. And ensure that the text of the deal is balanced to ensure the dignity of both nations. Again, if you go to China and visit with the Chinese, they just want to be treated with respect. And whether that means a good deal or a bad deal, they wanted to be treated with respect. The President of the United States, Secretary of Agriculture are all trying to figure out programs in which they can buy U.S. farm goods from farmers to help with the lower prices. It kind of brings us back to the hauntings of the CCC in the mid-1980s when the corn carryout was 5 billion bushels. And basically at that time, the government came in, bought the grain, but then filtered it back into the market when prices went up. So the program really didn't work as much as some people had hoped. As far as weather is concerned, we've got light showers moving across the Midwest Thursday and Sunday. The following week sees rains in the western region early in the week, and then the GFS model has more widespread rains. So it looks like the northern plains and the Midwest will see rains over the next couple weeks, especially the second week, and that could slow progress. We're expecting corn plantings tonight to be about 35% done versus 65 average, beans 18 to 21 versus 29 average. So again, the market has to digest the USDA report from Friday that showed higher corn stocks for 19 and 20, higher world wheat crops and wheat stocks for 19-20, and almost a billion bushel carryout in beans for 18 and 19 that will carry through into the 19 and 20 campaign. So the funds right now, we estimate, are short almost 100,000 soft wheat, 340,000 corn, and almost 190,000 beans, which is a record short position. And right now, weather, trade deal, momentum in the marketplace, money flow, none of that suggests they're going to cover those shorts anytime soon. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.